If you're running a small business and paying for 4 or 5 separate insurance policies, you're probably losing between $300 to $800 a year for absolutely nothing. Not because you need that coverage separately, but because nobody told you it could be bundled into one policy. Today I'm breaking down exactly how business owners are combining general liability, property, and business interruption coverage into a single policy, what it actually costs, where people mess this up, and whether it's worth doing for your business. Let's get into it. This video is for small business owners who already have, or are shopping for, general liability insurance, commercial property coverage, or both. If you run a business out of a physical location, a home office, or you carry equipment and inventory, this applies to you. If you're a freelancer with zero physical assets and no client-facing location, some of this won't apply to you yet, and that's fine. Stick around anyway because you'll need this eventually. So what exactly are we talking about? A bundled small business policy, most commonly called a business owner's policy, or BOP, combines general liability insurance and commercial property insurance into one package, usually with business interruption coverage included by default. Instead of buying these as 3 separate policies from 3 separate carriers, with 3 separate deductibles and 3 separate renewal dates, you get one policy, one premium, and one point of contact. The insurance company makes money the same way either way. They're just packaging the risk together, which lowers their administrative cost, and part of that savings gets passed to you. Here's why this matters right now. According to the U.S. Small Business Administration, there are over 33 million small businesses operating in the United States, and the vast majority of them are underinsured, overinsured, or paying more than they need to simply because they never reviewed their policy structure. Industry estimates from insurance marketplaces suggest that businesses switching from separate policies to a BOP save anywhere from 10 to 20% annually. That's not a marketing number, that's the structural savings you get from reduced administrative overhead being passed down. And demand for these bundled policies has been climbing steadily since 2020, largely because more people started home-based and small-footprint businesses that needed simple, affordable coverage instead of enterprise-level insurance products. Let's talk numbers. Here's a realistic breakdown of what separate policies typically cost annually for a small business compared to a bundled policy. Coverage type: standalone annual cost bundled, BOP, annual cost general liability $500, $1 $200 included commercial property $700, $1 $800 included business interruption $400, $900 included admin policy fees, per policy, $50, $150 each one fee owner total estimate $1, $650, $4, $050 $1, $200, $3,000. Keep in mind, industry estimates suggest actual numbers vary significantly by industry, location, and revenue size. A retail store with inventory pays more than a consulting business with a laptop and a desk. So where does that money actually go? The general liability portion covers third-party injury or property damage claims. Someone slips in your store, you're covered. The property portion covers your physical assets, equipment, inventory, signage, the building if you own it. Business interruption coverage is the one most people skip and regret. It replaces lost income if your business has to shut down temporarily due to a covered event, like a fire or major equipment failure. When you bundle these, you're not getting less coverage, you're removing the duplicate overhead each insurer charges you separately. On a monthly basis, most small businesses end up paying somewhere between $100 and $250 for a bundled policy, depending on industry risk level and coverage limits. Compare that to what business owners were previously paying in scattered monthly installments across multiple providers, and the difference becomes clear fast. Now let's talk savings potential, because that's really what this is about. Conservatively, a small business bundling 3 separate policies into one BOP saves around 8 to 12% annually. Call it $200 to $400 a year for a typical small operation. Realistically, most businesses land in the 12 to 18% range, especially once you factor in the single deductible structure instead of paying multiple deductibles across multiple claims. Optimistically, businesses with higher coverage needs, think a small retail shop with inventory and a physical storefront, have reported savings up to 25%, mainly because property and liability coverage overlap heavily in risk assessment, and bundling eliminates that redundancy. As for break-even, this isn't really an investment you're recovering, it's a cost reduction you see from your very first renewal. Most business owners notice the savings the moment their bundled policy replaces their old separate ones, typically within the first billing cycle. Now, the mistakes. The biggest one: business owners assume bundling automatically means better coverage. It doesn't. It means the same coverage, packaged more efficiently. You still need to check your coverage limits individually. Second mistake: people bundle without shopping around first. Not every insurer's BOP is priced the same, and some industries get better rates from specific carriers. Third, business owners forget to review the policy annually as their business grows. A bundled policy sized for year 1 won't fit a business that's doubled its inventory or added employees by year 3. Where's the opportunity here? Most insurance conversations online are either overly technical or pure sales pitches. There's a real gap for straightforward, no-pressure education, which is exactly why understanding this now puts you ahead of most business owners who just auto-renew whatever their agent set up initially without ever asking if bundling was an option. Here's how you actually do this, step by step. First, list every policy you currently carry and its annual cost. Second, contact a licensed commercial insurance broker, not a single carrier agent, and ask specifically for BOP quotes. Third, compare the bundled quote against your current total, coverage limit by coverage limit, not just the bottom line price. Fourth, confirm business interruption coverage is included, since some cheaper BOPs exclude it by default. Fifth, set a calendar reminder to review your policy every 12 months as your business changes. One thing that genuinely helps here, accurate business record keeping. Insurers price your policy based on your declared assets, inventory value, and revenue, and if your records are messy, you either overpay or end up underinsured. This is where having a proper system to track your business assets, revenue, and operations matters, not for the insurance company, but for you, so you always know exactly what you're insuring and why. If you don't currently have a system to organize this, Soft Angles can help you build a simple website or CRM setup to keep your business records organized and accurate. You can book a free consultation and get a cost estimate. The link is in the description. In terms of finding the right provider, this isn't really a marketing play, it's a shopping exercise. Get at least 3 BOP quotes from licensed commercial brokers. Ask your local Chamber of Commerce for broker recommendations, since they often have relationships with insurers who specialize in small business bundles. Avoid the trap of going with the first quote just because it's convenient. The risks here are mostly about undercoverage. If you don't disclose your full inventory value or revenue accurately, a bundled policy can leave you exposed in a real claim. Also, some high-risk industries, like construction or businesses handling hazardous materials, may find that a standard BOP doesn't cover their specific risks, and they'll need additional riders regardless of bundling. Do this, review your current policies annually, get multiple quotes, and confirm business interruption coverage is included. Don't do this, don't assume cheaper automatically means better, and don't skip reading your exclusions list just because the salesperson said you're covered. So, is this worth doing? For the vast majority of small businesses carrying 2 or more separate policies, yes, bundling into a BOP is a straightforward way to reduce cost without reducing protection. It's worth starting this review this month if you haven't touched your policy structure in over a year. It's not worth rushing into if you run a high-risk or specialized operation without first consulting a broker who understands your specific industry risks. If this helped you understand your options better, subscribe for more practical, no-hype business breakdowns. And if you need help getting your business systems, website, CRM, or record keeping organized before you go policy shopping, Soft Angles offers a free consultation. Link is right below this video.